Good morning, it's Lane Clark here at Beta 2 on Thursday morning. Today I wanted to talk about portfolios, compositions, portfolio bias. Why? Well, because very simply there have been a cacophony of headlines and data-driven events over the last week to 10 days. Now I don't need to cover it in any great depth. I know I've done that previously, and so have our other analysts here at Beta 2. But in very simple terms, I'll just say that the names of the events, slight terminology. So Janet Yellen, the Fed, is certainly one scenario that's been playing on the markets. Greece and the ECB, Mark Carney and the Bank of England, and of course the turmoil and volatility in China and their stock markets. Like I said, we don't need insight in that now. What I want to discuss is how that's played out for us. Well, throughout that theme, one thing has been quite consistent, and that's been dollar and yen strength on our portfolios. Now, as of today, we are, again, dollar and yen strength in quite a strong way. We're at what we would term max bias. At the same time, we're also looking for some pound strength. Now, reason being, technically, over the last 3 to 4 days, pound has been changing. Mark Carney has been obviously talking to the markets, and the anticipation now is that interest rates could go up quicker than initially expected. And on the back of that, technical traders are driving the pound up in value. In fact, today against euro is very, very strong. Now again, throughout this period, we've spoken about euro a lot, and rightly so. And we've said that we've alternated between being relatively euro neutral to having an abundance of euro weakness. Now the reason this changes is twofold. Firstly, manage risk. If you're going into a scenario in Greece not knowing the outcome of a particular vote, it would be foolish to have too much of a bias out there. But secondly, because euro has been volatile, technically it has been changing. So that's why we've been alternating on euro, and we haven't had the same level of consistency there as we have had in things like dollar and yen. But as of right now, we are definitely euro weakness. So our portfolios today, for you, Mr. Client, would perform well if dollar and yen were very strong and euro was very weak. Some pound strength would be nice as well, but in the main, dollar and yen strength. Now, as of late, the markets have been driven by things that have been happening throughout the market, throughout the ECB, China, Janet Yellen, etc., even Mark Carney. But what we're hoping for from now on in is that the technical climate will start to take over. And with where we are sitting right now, where we currently reside in regards to our portfolio, if technically we do see dollar and yen strength and euro weakness, hopefully your portfolio should profit from that. Obviously it's subject to change. If the technical market climate changes, then so too will your portfolio, and of course we'll inform you of this. And really that's it for today. Just really wanted to talk about where we were and what we would envisage happening moving forward. In an ideal scenario, I think you know what we're looking for, but if you do have any questions or any queries, do not hesitate to contact our office. So therefore, it just leaves me to bid you farewell. Have a fantastic day trading the financial markets.